Accounting fundamentals and DC Adler once again to the rescue. This time we're focusing on how DC Adler debits, credits, ADE LER, assets, draw, expenses, liability, equity, revenue. I keep repeating that because we need to be able to recreate DC Adler, understand what goes where. Debits on the left, credits on the right, debits on the left, credits on the right. All we got to do is get it right. But today we're unpacking debits left, credits right, draw, and equity. And if you look at it right here in the full DC Adler, draw and equity are in the same position on either side of the DC Adler structure. So a way to keep expenses and equity, which E goes where, draw and equity go together in partnership. And so here, under debits and credit, the mini snapshot version of the DC Adler diagram, draw under the debit side, equity under the credit side, they go together on the same line item. Now, what is a draw and what is equity? We know already that equity is an investment coming into a business. If I start my own business and I put my own money into to get the business started, then that dollar value of my money coming in is my equity, my skin in the game, my ownership of the business. So equity is that skin in the game, my ownership of a business. Now, so equity is like money that came in. What do I have in the business? Or another way to look at equity is if money is left over after all expenses have been paid out, revenue comes in, expenses go out, and leftover money could be parked under the idea of equity. Then that's my owner's, like I can touch that money. Now I can't touch it for free. I got to pay taxes on it, but equity is the money coming in. This arrow represents money coming into that account in the business. Now, draw and equity have a relationship to each other. Draw is money going out. So this arrow is pointing to money going out. So let's say I have my business, Luca's Lemonade Truck, money's coming in, I've got revenue, the money's building up. And I, the owner, need to understand that the money in the business is not mine. It belongs to the business. But let's say I want some of that money. Well, I can't just go and take it. There has to be an accounting trail that tracks where that money goes. Otherwise, money's just going to disappear. So let's say I draw money out of an ATM machine. And it's the business money. I have the business debit card, but I draw money out of the business and through the ATM, put it in my pocket, and I go out. Then that money needs to be accounted for, so we know where it's gone, and that money would be listed under draw account. And that would be money going out. So equity and draw share the same middle position in the DC Adler structure. Difference is equity is money essentially coming into the business, and draw is money that I take out of the business. So they go together, and that's how we differentiate between, well, what is the E in ADE, ADE, and what is the E in LER? Debit, credit, debit left, credit right, draw, equity, have this relationship, money coming in, money going out. DC Adler, seriously, it's the secret to all this accounting and making sense of it all. And we can understand it by being able to recreate this DC Adler diagram. And that's how we're going to keep it all straight throughout the entire class. End of video.